Again, Ken Creager from Black Swan Financial Advisors with my Black Swan Breakthroughs podcast, financial strategies for thriving through life's unexpected turns. Again, all videos are for educational purposes only. There's my website, which is under construction. Please subscribe to my YouTube channel. And if you would like to talk to me, please send me an email. So anyway, I find an interesting topic today and a timely topic. Tomorrow, we're going to get the Fed's most watched inflation number. But this week has been kind of interesting. The market is up today pretty good. But what I found really interesting, and what I wanted to discuss, is the banking crisis, which is still ongoing, and also inflation-resistant companies, because one of the earnings that came out yesterday after the market was McDonald's, and I found it very compelling. McDonald's is a company everybody knows about, but it has some characteristics that I'd like to bring up. I'm not making a recommendation for McDonald's by any means. This is for educational purposes only, but it has some important characteristics. So it beat earnings estimates, and it just kind of shows you how inflation resistant McDonald's is as a company, and how they've been able to raise their prices a little bit. And people, they still are very profitable a business. But one of the things that they noted, and this is what we're hearing all the time, I mean, I go to the supermarket and I try to buy eggs. It's ridiculous. But McDonald's in their earnings report talked about how consumers are getting pressured and are making hard decisions, and that they are seeing, so they actually had more traffic coming into the stores. So they had more people coming in, but people were buying fewer items. And so traffic increased, but people weren't buying that extra fry or the McFlurry or whatever, and they're really feeling the pinch of inflation. But you can also see how a company like McDonald's, Walmart would be very similar, Home Depot, some of these companies that are able to raise their prices, at least to a certain degree, to make up for the extra cost that they're getting hit by from inflation. But they're able to continue to be profitable. And one thing that about McDonald's is McDonald's knows their customers. They intimately know their customers, and they very finely tune their pricing. I noticed, I was kind of ticked off the other day. It's been going on for years and years and years. You could go get a drink at McDonald's for $1. And every place else is charging several, $2, $3, $4 for a Coke. And you could go to McDonald's and get a Coke for $1. And I went in there the other day, and it cost me $1.40. It's like $1.08 or something like that with taxes before, and it's $1.40. And they raised their price from $1 to $1.29. And that's a pretty significant. That's a 29% increase. But anyway, they really know their customers, and you can see how a McDonald's could be a really good company if you're trying to build your retirement. And I had another video where I was talking about buying these really stable companies that pay a consistent dividend, and you buy them and you own them over time, and the price goes up, and the dividend, pretty soon, you're making 7, 8, 9, 10% dividend payout on your initial cost basis. So just so you know, McDonald's has been paying a dividend for 34 years. And so they're a consistent dividend payer, very stable. I think it's a good opportunity to, that type of a company to look at. Now, one thing about this banking crisis, on the other hand, is at First Republic, the other bank, they came out and they said $100 billion of deposits were taken out of their bank in March, or March to April. And the other big banks had kind of bailed them out a few weeks ago, and now they, the big banks are not stepping up to maybe fill in the gap. And so I don't think this banking crisis is over. So here we have inflation, we have stupid money management people at some banks. I mean, they really, basic economics 101, you don't invest in bonds when interest rates are going up, but this banking crisis is maybe going to have a ripple effect. So you might consider, looking at these inflation-resistant companies as an opportunity to build up that retirement portfolio for yourself. So anyway, again, thank you for tuning in. This is a pretty short video. I will be doing some more videos on Social Security, SSI, ABLE accounts, get into a little bit more detail about the tax consequences and go through some real scenarios about determining, maybe when you should start taking your own Social Security if you're, reaching close to 62. Should you go 65, 62, 67, 70? You just do the math. That's all you do, and figure out what would be best for you and your family. Again, educational purposes only. Thanks a bunch. We'll see.